Hello traders, this is Anthony. Welcome back to this video. So first of all, let me take this opportunity to thank all my subscribers to the channel and all my viewers. So of late, you've been showing me some love by viewing the videos, liking the videos. So let me take this opportunity to thank you very much. So for uh, for those who are new to the channel, please welcome to this channel. So this channel basically we purely talk about the SMC concepts. So what I can urge you is kindly subscribe to the channel if you haven't subscribed to the channel, and always make sure to like the video, and also you can share to your fellow traders. So without wasting time, let us just start our video. So uh, So let me first start by apologizing for not uploading this video yesterday as on Sunday as usual. So because I always upload a top-down analysis on Sundays, but unfortunately this weekend I was quite busy, so I didn't make time to do this video. But they say better late than never, because today is on Monday, early Monday, and let me just do the video. So today I have some few pairs that I would like us to do the analysis together. Uh, and the pair that I'm going to start my analysis is on a DXY. So DXY, this is a dollar index pair that predict what will happen on all the USD currency pairs, all the pairs that are associated with the USD. That is, for example, you have the Euro USD, GBP USD, USD JPY, and the whole other pairs that that are associated with the USD. So what happens with the dollar index? So dollar index will predict what will happen on the USD currency pairs. So for instance, if the dollar index is bullish, we expect the USD currency pairs to be bearish. So in other words, you just do the opposite of what the DXY is doing. So in other words, the DXY is a driver of the currency pairs with the USD. So what does that one mean? It means that whatever is happening with this index, most probably is going to happen on the USD currency pairs. So in other words, you just duplicate, you do the opposite of what is happening here. So without wasting time, let me just start my analysis. So on my chart, you can see we are on a weekly time frame, and from what I can see, dollar index is bullish from the higher time frame, that is weekly time frame, because this is a valid break of structure. I think by now, if you have been watching my video, you know very well how I mark my break of structure. I have some set of rules on how I mark a break of structure. I don't just mark any break of structure from the charts. I have to have a reason for me to mark this break of structure. For instance, here you see this break of structure swept liquidity here. You see, we had a fake break of structure here. Uh, if you don't know why I'm calling this one a fake break of structure, you can visit my channel. There is a recent video that I make on how to mark a break valid and a fake break of structure. You can watch the video and you'll understand why I'm calling this one a fake break of structure. Now, this is a valid break of structure, and it's a recent break of structure here on a weekly time frame. So after that, you can see here we had a major inducement. We also have another major inducement. Or in other words, these inducements are what we call the SMT, or the smart money traps. You see, here we had an order block, but this one was a trap. Because now we expect this one to act as an inducement, That's where you can see market swept this in a low. They also swept this low, right? Now that the market took out the external structure, now what does that mean? It means most probably market will take out some internal structures before moving to the upside. So see, market came down, swept this liquidity, and from the weekly time frame, it seems like the market is reacting from this indecision candle. You see this indecision candle, this candle will belong with the top and to the bottom. That is the candle that the market seems to be reacting from on the weekly time frame. So that is it on the weekly time frame. So let me go down to the daily time frame and see what is happening right there. So from the daily time frame, you see here we had a break of structure. This is a valid break of structure because you see we have some kind of pullback here, market swept liquidity, then push to the downside. We also had this also was a valid break of structure since it swept liquidity above this high. If you go to the 4-hour time frame, you will see that this was a valid pullback, market swept liquidity before pushing to break the structure. So after that, this is a strong break of structure since it swept liquidity. That's where I can see market tried to react from this order block. You see, react push to the downside, but now since it was reacting from the weekly time frame, because you know the higher time frame are very strong. Since now the market was reacting from the higher time frame point of interest, so it was very strong and it pushed the market to change the character. So now this indicates that this indicates to us that this bearish trend is over and the market is now starting to push to the upside, which is aligning with what? The weekly time frame. So after that, we see here the market has been consolidating for some time. You see in this area, you see the DXY has been consolidating for some time. Now, here on the daily time frame, what can we see? After this change of character, where do you see the liquidity? And for me, there is no any visible structure here. Do you see any inducement right here? No. So for me, this low becomes my inducement. Because that is the first thing I would look at when I see a break or change of character. Where is the drop? Where is the inducement? And this is my inducement, the daily time frame, because I don't see any other liquidity here to be swept. So I'm expecting this low to be swept before we start pushing to the downside. Now, do you have any order block? Let me check whether this order block has been mitigated. Mhm. Let us try to zoom well and check. Let us mark well. No, exactly. So if we try to zoom in, you will see that this candle did not mitigate this order block. So what does that one mean? That one means that this is now our order block. This candle, this is our demand zone. So that is our demand zone, and this is our inducement. So I'm expecting the market to sweep this inducement, then push to this demand zone. Then from here, now we expect to see a bullish market or a bullish trend to break this high. So for now, this is from the daily time frame. This is my protected low. This is my protected low, or in other words, this is my strong low, and this is my weak high. This high here is a weak high or my targeted high. So we are not expecting the market to break this low, and if it breaks this low, that means now we are still bearish. Are you getting? If we break this low with a candle, that means we are bearish. But if um, we respect this point of interest and push and break to this high, then that means we are bullish. So that is it on a higher time frame. That is a daily time frame. But now we need to see what is happening here, the internal structure. What is happening here internally? So we need to get a clean picture on what is happening down here or internal here. So let me go down to the lower time frame. So here on the 4-hour time frame, you can see very well that the market has been ranging for a while. So this, if we try to look at this breakout structure, because here you can see we have a breakout structure. But now this breakout structure is a fake breakout structure for me. Meaning that now this order block is an inducement or smart money drop. You see, that's why you can see market push to the upside and swept this liquidity before pushing to the downside. So this was a fake break of structure since it never swept any liquidity before breaking the structure. So this I knew very well this I will act as an inducement. That was an inducement. Market swept that inducement before pushing to the downside. Although here in the 4-hour time frame, this is not a break of structure. This was a sweep of liquidity. So this is where the break of structure happened. So the 4-hour time frame, this is where the valid break of structure happened at this point. So meaning now the dealing range was this was a strong high and this was a strong low. This was a weak low. This was a strong high and this was a weak low. But initially, yeah, that was it. So meaning this was our order block. You see here we had this candle here before this impulsive move to the downside. This was an order block. So market reacted from that order block, although I was expecting some sweep of liquidity here before this one. But that one is understandable because market had already swept liquidity here before pushing to the downside. So market reacted from this order block and pushed to break the structure to the downside. Then we also had another push here to the upside. Market had also reacted from this order block here and then pushed to the downside. So let me just keep this one at this point here. So going to the 1-hour time frame, because I think that is where this analysis came from. One time frame. Let us analyze here from the 1-hour time frame. You can see very clearly that this break of structure had not swept any liquidity. So this was induced, then pushed to the downside, we had a break of structure. Pushed to the upside, market reacted from the this order block here. From the 1-hour time frame, you can see we had an order block here. Push to break the structure. We had a retracement, market reacted from this order block, and then now we have another break of structure. Now for me, I'm expecting to see some pullback in the DXY to react from an order block, then push again to the downside to this demand zone. So I'm expecting to see another bearish uh, push to this order block. Then from here now we expect to see some bullish trend to the upside. So now where am I expecting to see the reaction from? From what I can see here, you see this order block has been mitigated. If you try to check very well, you get this indecision candle, this candle with a very long wick. This candle has already been mitigated. So I can mark this one as my order block. So what I have here is this candle here. If you try to check well, you can see here we have an order block. So this is my order block here on daily time frame. Not daily, but hourly time frame. So we have an supply zone or an order block right there. So that is where I'm expecting to see the reaction from. And this order block, you can see it swept this internal liquidity. You see this high here. So it swept this liquidity. We had a sweep of liquidity there. and then pushed to the downside. On Friday, we had an NFP. That's why you can see this big candle to the downside. So last week on Friday, we had an NFP news. That's what caused this push and the breaking this structure to the downside. Now that we have the overview on DXY, so what are we expecting on the major dollar currency pairs? So we are expecting to see the opposite of what we are having here on the DXY. So now that the DXY is bearish internally, though from the higher time frame it's bullish, so we are expecting to see a bullish we are expecting to see a bullish move from the uh, dollar related pairs. So now going to the Euro USD, because Euro is USD, it correlates with the DXY at approximately more than 90%. It moves with the DXY at approximately 90%. So now starting from the forward time frame, I don't want to go higher because we have been doing this analysis on DXY. But now this Euro USD is contradicting with the DXY currently. Because from what I can see, the DXY is bearish, aligning with the DXY, of which that is what not we are expecting. We are expecting this Euro USD to be bullish since now the DXY is bearish. But we'll see what the internal structure is telling us. Because from our previous uh, analysis on top-down analysis, we marked this one as a break of structure. This is the current break of structure from the internal structure. But from the higher time frame, that is the daily time frame, we are bullish, which is very nice. We are very much bullish from the higher time frame. But the internal structure, it's currently bearish. That means that this is our protected high and this is our targeted low. But guys, you know very well we react from with what the market is showing us, not what we think or what we are expecting to happen. We just make sure you react with what the market is telling you. From what I can see, here we are bearish. This is the last break of structure, and this is my order block. The market left this order block here. You see this candle here, and the market during the Friday's NFP market pushed to this point of interest, and I can see now currently it's reacting from this order block. Although in this push to the downside, there was no any major inducement. Can you see any valid pullback within this leg? I don't see any major pullback here. So for me, I'm still expecting this high to be taken out. This high to be taken out. Although this is a strong high, it is a strong high because it swept all these internal structures here, then pushed to the downside. But from the higher time frame, remember we are bullish and already market has already traded to the discount. Remember we said so on our previous top-down analysis. So still, I'm expecting this high to be taken out, although it is a strong high, but I'm expecting until the market breaks it, I cannot confirm that we are bullish. So currently, this analysis is contradicting somehow, but we'll react from with what the market will tell us to do. So let me go to 1 hour time frame and read the market structure from there. So starting from this area, so this was a fake break of structure. I think by now you understand that. So that's where we can see the market came back and induced this low. So this low was taken out before this break of structure. So now this was a strong low and this was a weak high. Although now within this extension to the upside, market never left any inducement. There was no any trap. Market never had any pullback, never created any minor inducement, nor a major inducement. So later on, it came and took out this low. You see, market took out this low before pushing to the upside. Now, Um, on Friday, we can see from the 1 hour time frame, we had this break of structure. See, this is what I'm having currently. This is a very strong low since it swept liquidity before pushing to break this high. So this low for me, it's a very strong low, and this is our weak high. Although market is currently sitting on this higher time frame point of interest, that is from the 4 hour structure. This is our uh, point of interest or our order block, or you can call it a supply zone. And it seems like the market is reacting from this order block. But from the internal structure, this is the structure that I'm having, of which is aligning with the DXY. Remember, DXY is bearish, so I'm expecting to be bullish on the Euro USD. So for me, I would like to wait for the market to come to this point of interest. And then I will wait for a confirmation, since now it's contradicting with what I'm having in the DXY, because here from the Euro USD is telling me to be bullish, but the DXY is telling me to be bearish. So I have to wait for the confirmation. So I will wait and see what will happen. So if you would like to take a sell from here, you need to wait for a confirmation. Wait for a nice confirmation, a good change of character before you take this sell. And also wait also for a confirmation here for you to take a buy. So this is what I'm having. I'm expecting to take a buy from this point of interest here, and this I will be my target. But don't take this trade blindly. Always make sure you wait for the confirmation, because this is a strong low, this is a weak high. Still, if you can get a good confirmation here to take an entry, also you can take this sell, because Euro USD it's bearish for this structure, because this is my dealing range, this is my strong high, and this is my weak low, and the market has traded to the extreme point of interest. If you get a good confirmation here, you can take a sell. I will wait from the 15 minutes time frame to see whether I will get a nice confirmation for me to take a sell from that area. And from here, I don't see any good change of character, because I don't see any strong low. This was not a strong low since it never swept any liquidity. This also was not a strong low. So I can't say that this is a change of character. And also, if you try to check here high, market never swept liquidity. Here, it left an two equal highs here. So for me, this is a kind of trap, so I cannot take a sell from here. But if I get a nice uh, confirmation here for me to take a sell, I will react from there. So that is it that I'm having on Euro USD. I don't know how you think about this setup. So make sure you comment on the comment section, leave a comment there. How do you think about this setup? So the next pair, it's a GBP USD. I will start also from the 4 hour time frame. And also the GBP USD seems to be clean, because this is the change of character that we have been talking about. After this change of character, so the market came up, swept the liquidity above this here, since there was no any other uh, visible inducement here. So this I was only the inducement here. Market swept that inducement, pushed to the downside, and broke this low here. Since this is our strong low, it swept liquidity before pushing to the upside. So this was our strong low, and market induced the low, or it broke the low, sorry. We had this change of character here. After that change of character, we saw this retracement, then pushed to the downside during on Friday's news. Market pushed to the downside and broke the structure. So from what I can see, the GBP USD, it's bearish. From what I can see here, it's very much bearish. And now, what I've been telling you, whenever you see a market whenever market takes out an external structure, We expect, first of all, you have to ask yourself, where do you see the inducement? Where is liquidity? And from this extension, there was no any other liquidity. So the only liquidity was above this high. And that is why you can see during the NFP, sorry, NFP was not here, it was here. During the NFP, market pushed to the upside and swept liquidity above this high. So after the sweep of liquidity, you can see the market is now reacting. The same thing that is happening on the Euro USD. The market is now pushing to the downside. So now the same thing here on the GBP USD. So wait for a nice confirmation here before you get involved. So going down to the lower time frame, that is 15 minutes time frame, we see any strong low. So for me here, I can't see any strong low. Because in fact here there is no any strong low. Even going to the 5 minutes time frame, do you have any strong low? No. This low never swept liquidity. So I cannot say that this is a change of character. This pullback never swept any liquidity here. So this is not a valid break of structure for me. So wait for a nice confirmation before taking any sell. I'm not telling you to take any sell here until I see a nice structure here on this push. If I get a nice structure, then I will get involved and I will update you on Wednesday as usual. I'll make another video on Wednesday to update you on what has happened on this top-down analysis. So currently I don't have any clean structure on the 4-hour time frame. So I would rather wait and see what the market will tell me. If I get a candle closure above this high, if we get a candle closure above this high from the 4-hour time frame or the 1-hour time frame, then now we know very well now this structure have shifted from the bearish to the bullish because this is a strong high. I'm not expecting this high to be taken out. This is a strong high. It swept some internal structures here before pushing to break this low. So this is a strong high. If this high gets to be broken, then I will get involved from bullish. We'll start looking for bullish setup. But for now, just wait. There is nothing clean here for us to take a trade. So wait for a nice setup before getting involved. So that is it on a GBP USD. And I think the last pair that I'm going to do is the gold. The last pair I'm going to analyze is gold. And it's been a while since the last time I did analysis on a gold, but let us do the analysis on gold here. So from the daily time frame, what can you see? You can see very clearly that the gold has been bullish for a while, and we had gold was stuck on this range for a while, but now I think on last week we saw this bullish extension to the upside, and the market broke this high. You see, we had a break of structure here from the daily time frame. So this is the break of structure. We have that break of structure. So what happens now? That means we are expecting to see one of the internal structure to be taken out. Although you'll see gold, it's very funny. So if you have been trading gold, you know very well gold sometimes does not uh, respect some of these rules that we are having. Gold does not retrace that much. That is what it finds. Gold does not retrace that much. Gold normally does whatever it wants to. So I will not be surprised if the gold will fail to come and take out this low maybe or this, because this is the inducement that you can see. So I will not be surprised if gold will not come and take out this low, because that is how the gold behaves, guys. So what I will do, look for what is happening, what gold is doing currently, and then we react to what the gold is doing here. Because gold can fail to come to this low and just react from somewhere here and continue pushing. So going to the lower time frame, that is 4-hour time frame. So let me clean out this area and we do the analysis together. From what I can see here, we have a valid pullback. Can you see? We have 3 candle stick retracement here, this pullback. So this is a valid pullback, and most importantly, this pullback swept liquidity below this low. Can you see that? That pullback swept liquidity below this low. So we have strip of liquidity, then we have a break of structure. That is a break of structure. We have a break of structure. So now that means what? That means this is our dealing range. This is our weak high and this is our strong low. So let me mark that. This is my strong low. This is my protected low. And this is my weak high, which we are expecting to be taken out. So now that we know the market has taken out this structure, we are bullish on the on gold. So where is our point of interest? And from the 4-hour time frame, the only order block I can see here, it is this one. So let me mark with the line. This is our order block. Let me mark it this way. So this is our order block and we have a fair value gap here. So don't be surprised if the gold will come to this area, then react from here and continue pushing to the upside. So this is our order. But now, what is funny here, we don't have any inducement within this leg. So let me go down to maybe 2-hour time frame and try to check whether we can see any other valid point of interest down here. This is our breakout structure. The reason why I'm marking this order block this way, gold can react from here. That is why we'll wait for confirmation. Gold might react from here and then continue pushing to the downside. So that is how volatile this pair is. That's why I don't advise a beginner to trade gold. So if you are beginning trading, kindly stay away from the gold. Stay away from the gold. Gold can disappoint you. If you have been trading gold, you know gold can really disappoint you because gold is very volatile and it reacts very fast, which is not good for a beginner. Even I personally, I don't trade that much on gold unless I see a very nice setups which is aligning with my trading plan. If it aligns with my trading plan, uh if whatever I always look at, or in other words, if my checklist checks out very well, I can now take part in gold. But if I can see one of my checklists is missing, then I would rather stay away from this pair. Now here on the 2-hour time frame, do we see any other valid order block? And if you try to zoom well here, you can see this candle here did not tap to this order block. So I have a visible order block here. So market left an order block at this area. We have a very nice order block here. So now those are the 2 points of interest that I have. I have this order block from the 4-hour time frame. It's a valid order block. The only problem is there is no any liquidity here. But for this one, it's a very nice order block because it is sitting at the extreme and we have liquidity above it. So we have some kind of trend line liquidity here. we have some kind of trend line liquidity. We have this first touch, second touch, and the third touch. So this one acts as liquidity for me. So for me, I would rather take this setup from this point. So if you are that swing trader, you can place an order from here. Remember, your stop loss should be below this low, not below this order block. The stop loss should be below this low, this one, because this is your strong low. Some pips below the low, then the take profit should be high here. So this will be like 2.74. But for me, I rather wait for confirmation. One advantage of waiting for the confirmation is at least confirmation will confirm to you that this market is ready to move to your direction. That is an added confluence that the market is going to respect this structure. That is this dealing range. Because even if now that we are saying that this low is a strong low and it is swept liquidity, does not mean that the market cannot break this low. No. Remember, these are just the line that we are drawing in this chart. Market does not care about this line that you are drawing on the chart. That is how trading is. So market can decide to break this low and also push to the downside. It's only that this is what has been working with us, and we are expecting this low to be respected and the market push to the downside. But that one does not mean it's a must for market to respect this low. No. I'm not saying that it's a must for market to respect low, but it is most likely to be respected. That is, I think that is the correct word to use here. It's mostly likely to be respected, but it's not a must for it to be respected. So just wait for a confirmation, because I've said the market can react from this order block or this order block. So always wait for confirmation. That is why I will update on Wednesday on what will happen. Even I will not be surprised if the gold will come to this fair value gap and then continue to the upside. That's how funny gold is, guys. So just wait confirmation. I will update you on Wednesday on what will have happened. So guys, I will wish to stop at that point. That marks the end of our video. That is our top note. A quick reminder, guys, if you are new to the channel, please make sure to subscribe to the channel, like the video, and also share the video. So until next time, it's a bye bye for now.